Here's what nobody tells you about credit scores. The difference between a 620 and a 750 could cost you $7,000 on a 30-year mortgage. That's real money leaving your pocket because of mistakes that are completely fixable. Most people think building credit is this mysterious process that takes years. But the truth is, you can see meaningful improvements in 90 days if you know exactly what to do. Let's start with how credit bureaus actually calculate your score, because this is where most people get it wrong. Your score breaks down into 5 components. Payment history is 35%. Credit utilization is 30%. Length of credit history is 15%. Credit mix is 10%. And new credit inquiries are 10%. The first 2 categories alone make up 5% of your entire score. If you're ignoring these, you're leaving thousands of dollars on the table. Mistake number 1, carrying high balances on your credit cards. If you have a $10,000 credit limit and you're using $8,000 of it, lenders see you as high risk, period. Your utilization ratio should be under 30%, ideally under 10% if you want an excellent score. Here's the thing, you don't even have to pay off the debt this week. Just move some balance around, pay down the high utilization card, or if you have available credit elsewhere, shift the balance there. One of my clients did this and went from a 620 to a 720 in exactly 8 days. Mistake number 2, making late payments or missing them entirely. Even one 30-day late payment can drop your score 100 points instantly. But here's where people mess up. They think they have to be perfect forever. You don't. If you've missed a payment in the past, it does matter, but it matters less and less as time goes on. A late payment from 3 years ago affects you way less than one from 3 months ago. Set up automatic minimum payments on every card starting today. You can pay more manually later, but automate that safety net. Mistake number 3, closing old credit accounts. Counterintuitive, right? People pay off a card and immediately close it thinking it'll help. Wrong move. Closing an account shrinks your total available credit, which tanks your utilization ratio. Plus, closing old accounts removes positive payment history from your report. Keep those accounts open. Use them for a small recurring charge, like a Netflix subscription, and pay it off monthly. This is the hidden credit score hack nobody talks about. Mistake number 4, ignoring errors on your credit report. You'd be shocked how many negative marks are completely wrong. About 1 in 4 credit reports contain errors. And if one of those errors is on yours, it's costing you points you don't deserve to lose. Pull your free credit report from annualcreditreport.com. That's the only official site, not Credit Karma. Look for accounts you don't recognize, wrong payment statuses, or duplicate entries. If you find something, dispute it in writing. Most disputes are resolved in 30 days. Mistake number 5, applying for credit too frequently. Every hard inquiry can drop your score 5 to 10 points. If you're constantly applying for new cards, new loans, or store credit, you're shooting yourself in the foot. Space out applications by at least 6 months. Now, here's the real action plan. This week, pull your full credit report, set up automatic minimum payments, and check your utilization ratios. Next week, dispute any errors you find. This month, pay down your highest utilization card to under 30%. These actions compound. In 3 months, you should realistically see a 30 to 50 point increase. One last thing. Be skeptical of credit repair companies promising to fix everything overnight. Those quick fixes don't exist, and you can dispute errors yourself for free. What does work is consistency over 90 to 180 days. If you're serious about financial freedom, Understanding your credit score isn't optional. It's foundational. Like this video, if you learned something, subscribe for more money tips that actually work. And let me know in the comments which mistake has been holding you back.